All right. Welcome everyone. Welcome to Market Wrap. We have Mr. Pankaj Pandey with us, and once again, interesting week. We had, I think, three green days in all, three good green days, and one good red day. So, what happened this week, sir, and what are we expecting from here?
Hi, good evening, Vishu. So I think this is for the second consecutive week. We have done well, largely driven by the outcome of the state elections, and along with the fact that global cues were a lot better. Good part is that while Nifty witnessed a gain of nearly 1% this week, the broader markets did even more better. So mid caps jumped by about 2.3%, and small caps did even better at 4.5%. Our sense is that overall for Nifty, supports are placed somewhere about 23,700 to 23,500. And our sense is overall, we would be seeing better levels from here on. So 24,500 is what we would expect. Good part is that the overall market breadth has definitely improved. So you had about 12% of the stock at the beginning of mid-November, which were above 50-day simple moving average. Now you have 35% of stocks in that territory. And since historically December has been a very better month for the markets, in general, 73% of the time markets have delivered a gain of over 3 odd percent. So I'll not be surprised if Santa rally happens and that takes the market to a higher level. Another bit is that the dollar index is facing resistance at 108 odd levels. So from there on, probably some reversal can happen, and that might lead to some risk on sentiment in equities. So obviously that is also going to help. Sectorally, what is looking good is so our pharma continues to sort of do well. That is one. Then BFSI risk reward wise is pretty attractive. Capital goods post election mandate has done well, especially the defense part, and metal is good from a risk reward perspective. So I think these are the sectors which should be in focus going forward.
Absolutely, sir. I think this week has been one of the most positive ones ever since we started our downfall from the all-time highs. So one of the big reasons was FIs, of course, in the past, what we saw for that fall. So what basically my question is, what are FIs doing now? Has this short rally got to do something with FIs?
I think there are two, three things. One, obviously, when you look at October, they've sold about 1.15 lakh crores. Mid-November, they were selling. I think this week has been positive to the tune of about 9,500 crores. Obviously, MSCI rebalancing has a big role to play there. But good part is that the intensity of FI selling is definitely coming down. And our sense is that with this weekly expiries coming to an end, then there's the volatility, especially what we see in large caps or the kind of index management which used to happen. I think that will be put to rest to a great extent. So from that perspective, we would expect a more normalized behavior for the market. Otherwise, the kind of volatility what we have seen in large caps, I think that was quite impacting on the overall sentiment. So I think we are expecting a more normalized direction of the market going forward. So from that perspective, I think volatility is definitely going to be lesser. And good part, obviously, is that the FI intensity has definitely come down.
Right. I think another big news this week was that the government is going to look at how we actually calculate the inflation and how can we do it better. So what can we expect for the markets from this?
So I think it's a very structural positive if it pans out, Rishi, because sorry, Vishu, because what happens that see government tracks the household consumption expenditure, and so overall the weightage for food and beverage is somewhere about 46 odd percent. Now, when you look at the recent inflation figure, which came out at about 6.2 odd percent, the food inflation was about 10 odd percent, whereas the non-food inflation was 3.5%. Now, your entire policy is anchored on these on this CPI number, and which is where the RBI has been sort of saying that there is the room for rate cut is relatively less. But if you switch over to this new mechanism where the food weightage is going to come down by say 5 to 6 odd percent, which typically means that you could see CPI coming down by say 35 to 40 bips. And there is another thought that food should be excluded, which is what even the US Fed also does. And if we were to sort of incorporate some of this, then I think even in a normal scenario, we could have an inflation of nearly about 4% because core CPI is somewhere about 3.7% for us, and we have repo rate at 6.5%. So this literally opens up the headroom for a rate cut of 100 to 150 odd bips if we are keeping 100 bips as the positive real rate. So from that perspective, a structural decline in interest rate can be possible, and the volatility what you see in the policy rate is definitely going to be a lot more lesser because we all know that food inflation is quite seasonal and it keeps impacting, and which is why I think if government were to adopt this template, then I think structurally it is very positive for the market because your interest rates will come down, and which is very beneficial for equities in general.
Right. Another sector that was in the highlights this week was automobiles, of course. We had so many highlights. I think let's first of all begin with Mahindra and Mahindra, which has come up with B60, and I think pretty much everybody is talking about it. I think we also had Mahindra results just a while back as well. So overall, how do things look for Mahindra and Mahindra?
So yes, Vishu, this week has been the week of launches for EVs, and Mahindra obviously is capturing the maximum highlight or limelight, should I say, and largely because of the kind of launches they have done. And I think these launches are quite disruptive and quite good in their segment. One, because of the pricing is quite attractive for the two models at about 19 lakh and 22 lakh. And good part is that the colors are also quite bright, what you see on sort of social media. The battery is quite, so these are very well packed in terms of battery pack options of nearly 59 kilowatt hours and 79 kilowatt hours, which means that in both the models, you are getting a range in excess of 650 odd kilometers, which is quite impressive. And if this was not enough, they have come up with a lot of tech-loaded features. So ADAS level plus 2 plus, you have features like, say, for example, infinity sunroof or auto parking, along with a very good sound system. So what it does to Mahindra is that, see, Mahindra has been very aggressive in the SUV as a space. They have carved out or they have penciled in or they're looking at a total investment of about 16,000 odd crores. Initial investment is going to be about 4,500 odd crores. And they are looking to ramp up their capacity, say from 10,000 per month by FY25, and they'll take it to about 18,000 per month. And what it does is that, see, Mahindra is already one of the SUV players which is guided for a mid-teen kind of a growth rate. And I think what they're also saying is that now of their entire portfolio, 20 to 30% is going to come from EVs by 2027. So I think all these launches are a step in that direction and really confirm our bias or our bullish bias on the company, because I think this is one company where growth is significantly higher compared to the competition, which is talking of a single digit kind of a growth rate. And no wonder Mahindra is our top pick in the auto space with a target price of 3,600.
Right.
The other,
yeah.
The other launch was for Ola Electric. I think Ola Electric is getting quite aggressive from a pricing front. So the kind of pricing they have come up with at 40,000, 50,000, 60,000, and 65,000 is quite aggressive for the 1.5 kilowatt hour battery pack. So they're targeting multiple segments, individual users plus also the gig workers. So from that perspective, I think this is one company which is on its course to sort of disrupt the entire two-wheeler industry. So while we don't have a coverage, but yes, the pricing and the overall complete package looks quite disruptive for the existing two-wheeler category. And if this was not sufficient, even Honda also had launched their Honda Activa E and QC1. Now, while the pricing details are not there, but I think what they've come up with pretty good swappable battery options And so which again is one of the good sort of cases where our sense is that they could be disruptive. Mind you, Honda is already one of the largest two-wheeler or scooter player in the scooter segment. So from that perspective, while the pricing is yet to sort of come out, but you are clearly seeing a lot of launches. So disruption is going to be the new norm, especially in the two-wheeler and four-wheeler. Yes, Mahindra continues to sort of surprise competitors in a big way.
Right. Another news this week was around bank assurance, and I think there was some limitations on them that are planning to be put. What's going on there?
So yes, there's some rumors, but what is coming out probably is, or what could come out is that so IRDA probably might consider capping the contribution of bank assurance business at 50%. Now, when you look at the existing life insurance players, the likes of say HDFC Life or say SBI Life or Max Life or ICICI Pru. Now, HDFC Life gets 65% of their business through this channel, SBI about 60 odd percent, Max Life at 52 odd percent. I think ICICI Pru is best placed where their share is about 29%. Now, within this, when you look at the contribution from their parent bank, so for HDFC Life, it's quite high at 80-85%. SBI Life is even more higher at 95%. But here also, the ICICI Prudential is quite well placed at 50 odd percent. So, which is why if you look at the kind of volatility what we have seen in the life insurance companies as a result of this news, which is yet to be sort of confirmed. I think ICICI Pru is the least impacted, whereas the others are definitely going to see some kind of impact if this were to sort of come out as a regulation. So we're keeping our fingers crossed, but yes, somewhere down the line, one thing is very clear that the life insurance companies need to rely less on their parent for selling insurance policy because see the bigger worry for the regulator is the kind of mis-selling which happens. So I think this is a step in that direction. So some form of this can very much be possible going forward. So which is where I think one needs to be cognizant of this fact that a regulation of this kind can come up.
Right. We also had LTI Mindtree's analyst meet this week. So what are some of the key takeaways for us?
So when you look at the headline numbers, Vishu, it says that the turnover is going to go up from say 4.3 billion to $10 billion. When you sort of break up the overall numbers, so this is going to happen in the next say 7 odd years, which means that a low double-digit kind of a growth rate. And again, the growth rate is going to be 2x in the BFSI and the technology space, which is their core area, forming 60% of the business, and the rest of the verticals, you'll see a 3x kind of a growth. So so things were good till this end, but when you sort of look at the overall construct going forward. Now, one is both LTI and Mindtree merged on the premise that you will see some synergy benefit, but the management is still talking of a similar kind of a margin, which both these entities were carrying earlier. So there are no positive surprises on the margin side. And then I think this low double-digit growth is also not really inspiring so much. And so from that perspective, overall, we are slightly disappointed from that perspective. And which is why this is one of the few companies where we don't have a buy in the technology side. So we are keeping a hold rating on the stock.
Right, right. We also had an update from Siemens this week. What's the story playing out there?
So Siemens came up with their Q4 numbers. So their year ending is different. So when you look at their quarterly numbers, the revenue grew by 11 odd percent. Again, you had segments like say energy, which did very well for them because this is one segment which contributes nearly 1/3 of their overall top line. And that grew by about 12 odd percent. Then you had mobility, which grew by about 24 odd percent. Order inflows have been the best of the part because their order inflows were about 6,000 odd crores, so up about 37 odd percent. And on a YOY basis, overall order is about 23,000 odd crores, which again is up 14%. And we have to exclude the last year's order of say 20,000 odd crores, which was there for 900 HP electric locomotive, because that's a sort of a one-off order. So from that perspective, top line growth plus order book was pretty good. We have seen a margin expansion of 250 or 260 odd bips, which is very good. The company is making investments in the right places, so they're upping their transformer capacity. On top of it, they are spending about 100 odd crores in the transmission side. Transmission is one of the hottest area in the power as a overall space, given the shortage not only domestically but globally. So I think this company is making all the right noises. Where we sort of stop is when we look at the valuation. So this company is commanding current valuation at about 100 P multiples, and which is why I feel that while everything is good, but I think valuations limit upside. So stock probably could do more of a time correction, but never say never, because second half is where we expect government to do a lot more capex. So I'll not be surprised also if the stock does well, given the fact that this is one of the most sought after stocks within the capital goods space.
Absolutely. And finally, the most awaited section, our hidden gem of the week. What will it be this time?
So while we can't recommend Siemens or a lot of these capital goods name, but we can still write this story. So which is why I'm recommending HPL Electric with a target price of 660. Now, this company is into smart metering, and we all know that government has come out with a mega plan of having 22.2 crore meters to be sort of installed. Now, this company has got a capacity of about 1.1 crore, and they've got a fairly good order book of about 3,500 plus crore, which has to be executed over the next 2.5 years. And order book to bill is somewhere about 3.6. So our sense is while the order book is good, the second half can, or even subsequent quarters can witness further more inflows. So this is one company which is in a sort of a sweet spot, given the fact that on the transmission and distribution side, like I said, this is one segment where the government is going to focus even more. So this company is rightly placed, and numbers are also pretty good, and they haven't really disappointed. So our sense is that even going forward, we could be easily seeing about 22% kind of a revenue growth, and EBITDA growth could be even more higher, 20%, and bottom line growth could be even more higher at 48 odd percent. And which is why we have given a P multiple of 30 to arrive at a target price of 660. So yes, within capital goods, I think this looks to be a good pick at current levels.
Awesome. Well, that was it this week. Thank you so much, everyone, for joining in. Thank you, Pankaj sir, for your time. We'll be back next week with another market wrap. Thank you so much for watching again.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.